Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday, December 6th. What a day. What a day in the market. Crazy. If you followed it from beginning to end, it was nuts. But what I love the most about it is it bounced off of support, right? So when it started to turn around after an awful open and a really rough, first hour or so, we saw the indexes test support, started to see some buyers coming in and actually closed pretty strong. And good afternoon to you as well, Ed, and everybody. Hope you had a great day trading. It was definitely interesting. There's no doubt about it. So we'll take a look at our charts, take a peek on the intraday on the S&P and a few of our indexes, kind of see where the price points they were bouncing off of here today. Before we do so, just looking ahead to earnings tomorrow before the open, just a handful of big name companies. In the S&P, we have Broadcom. They were up at first reaction. I didn't take a look at any of these earnings reports, just kind of the first reaction. You had Broadcom up and Ulta down on the first reaction to the earnings report. You also have Lulu coming out, and they were down about 4% early in the after hours trading. So a little bit mixed bag. Obviously, there's a lot of time between now and tomorrow morning for things to settle. But if you are the type of person who likes to trade potentially off of earnings, well, there's a few for you to keep an eye on here tomorrow on the open. As we kind of shift into our indexes, let's go into just our daily chart first. Then we'll take a little more of a bird's eye view here. Again, you guys know I saw some of you guys in the halftime show, and so it was ugly. That's kind of where we started to test that support level, right? And we did. The S&P came right back down into that support range, and it put up a fight. It was a little iffy there, but again, that is such an important price that if you're a bull, and I'm not saying me or you, I'm talking about, the bulls, the big money out there, whatever you want to call it, they've got to buy at that price point, right? That is a significant level of support. We're all clearly watching that level of support. And at least for today, they've shown they're still willing to buy off of it. As I always do, I kind of just scratch my head when, the market is throwing a fit one way or the other. I don't think it's a rational place. I don't know if you agree with me, but I don't think it's rational. But I do love that it behaves technically. So I'll take it. I will take it. If you go in and look on the intraday, that's where things can get a little bit interesting as you kind of watch for these patterns to develop in the future. Because who the heck, I know I wasn't going to buy off of support blindly, as we saw our indexes work into support. There's no way, I'm buying that. I'm recognizing it's support. Maybe I'm open to, I'm probably thinking seriously about closing any shorts I have, but I'm not buying that, not like that. So, we have to see that shift in momentum. Here we are on a 15-minute chart on the S&P. Now, we'll kind of see when we look at the NASDAQ, it kind of got the ball rolling first. It was definitely, for the first time in a while, kind of the leader, if you will. But you can kind of see we kind of rallied up, testing the top of that gap, sold off and then put in that higher low. This was almost the pattern that we've seen on a few of our different sectors lately, right? Except whereas they got beat up at resistance, we actually late day took out resistance. Last 45 minutes of the trading day, took out resistance and really kind of ran all the way up to the bottom of that gap. That's going to be the price point I think we want to be keeping an eye on tomorrow on the, on early in the trading day. Let's see how we react to that gap out point or gap down point, I'm sorry, there on the S&P 500. Over in the NASDAQ, it really, it fared better. It came back to, as opposed to the bottom, the W pattern like we've seen in our S&P, we'll also see on our Dow, it kind of came back to this previous support level, caught it early, and it was very, I guess very strong is maybe a stretch, but it showed a lot of resilience early. It really did. We broke out a lot earlier in the day of that same type of a pattern, right? Where, we opened, sold down, but then created resistance and ultimately broke out of it, tested it, rallied back into it. And again, last part of the trading day, pushing through that resistance level. A lot of resilience in this market today. Again, it makes sense from a technical point of view that we were bouncing off these support levels, right? But when you think from an emotional point of view, and I know that we're not making decisions emotionally, but to get to those places so fast, so violently, I wasn't going to be the first one buying at those prices. That's for sure. So, but somebody clearly was and got the ball rolling over on the Dow. Same thing. We really worked right back into that old support level, caught our footing there, and started to push up, much like the S&P kind of had that late day breakout, late day surge. Again, we can kind of watch how we respond to the bottom of this gap here tomorrow as if we get to test it. I'll expect these intraday resistance levels that were breakouts here today to be my support levels on the intraday tomorrow as I'm kind of watching, how things are developing. Now, over in the Russell, I'm not going to feel the same way personally. The Russell breached but didn't close. Very important. We see it all the time, right? A breach. We did break below support. We saw some really good selling when that happened, because just naturally that's going to be a place where you're going to see selling happen, right? Stop losses and stuff like that. But we didn't close. Showed a lot of resilience over there as well. I do kind of like the way that the other markets responded a little bit better, but on the other end of it, if you want to play devil's advocate, you can argue that we're a lot closer to support on the Russell. So if we're banking on support holding and we're trading directly into the Russell or the Russell ETF, our risk is probably a little cheaper, on a per share basis than the S&P, because we're a lot further away from support on the S&P and our other indexes, of course. So, I could see, that argument. I do kind of still, again, today hasn't really changed my mind too dramatically on anything other than the NASDAQ. I still am okay as long as we hold those major support levels. I'm not a super bear or anything like that. If that breaks and we hold that break, obviously, I think that's a very bearish signal. But I really, really liked the way that we moved here on the NASDAQ. Now, we're just going to have to look ahead into next week or even a couple of weeks down the road. Now, this support level is going to be a pretty important area. We already had it identified. We knew that that was a price. Now we've seen buyers step in off of this support level. We've put in that, yet another lower high. But if we can get some continue this upward movement, and hey, maybe that's an if in this market. It doesn't seem to know what it wants to do. It just wants it to be a big every day, right? It's a day trader's market right now with the intraday movement. But if we can continue this momentum, all of a sudden, maybe there's something here. We'll find out together. We'll talk about it here. We'll be talking about it with Matt and Tim in the halftime show. So if we see that, we will definitely point it out. So, a very interesting day in the market. No two ways about that. Support bounce. That was a trampoline bounce, right? It got there and everybody came in to play. They kind of staggered themselves in. But by the end of the day, it was a pretty bullish close. There's no doubt about the close of today. Taking a look at our materials, these things are going to some of these charts are going to look better than others from a technical point of view. So for example, on the material sector, as I look at it, I have to call it a break of the support level, at least that I've been looking at. We closed right near it. So if we see some upward movement and get me back into that range, I'm going to be okay with it. And I'm going to basically not stress that it's a clean break. If we see another close below here, though, or downward movement, that's going to throw off this pattern for me at least. And so I'm going to be really interested. I don't think I have an opinion on materials going into tomorrow, to be quite honest with you. I think I'll feel a lot better. Well, who knows? It won't do anything just because I said that. If I can get some upward movement and get back into this trading range, this is a pretty bullish candlestick, right? Nice bullish hammer here. So if I can get that, I'm going to feel okay with the material sector. I'm not saying I'm an aggressive bull. How can you say that right now on about anything? But I would, be okay with it from that bullish perspective. Conversely, if we see some downward movement, I'm going to call that a break. Basically, no matter how it plays out, we've got to get back up above that for me before I'm open to anything bullish. If I see downward movement, I could understand the bearish argument. I don't think that's where my head will be tomorrow, at least. But hey, I've got a long time before tomorrow to change my mind. But I think this is the area that we do want to keep an eye on. We've seen it act as support. We know it should be a little bit of a challenge, whether we're just, I just want to wait and see how this one plays out, or hey, I'm looking to go in if I get upward movement, or go short if I get downward movement. I think no matter where we are on this that is the number one price point that we're looking at over in the materials sector. In the energy sector, gap down, broke again, pretty similar, have a nice bullish hammer candle to close the day. But I think, again, this is a little tougher read. Depends on how you want to call it. Do you want to call it a break as we broke these lows, or do you want to call it not a break because we closed above the actual low point here? I don't have a good read on it, to be quite honest with you. I think the best signal is making it close below this point, from a bearish perspective, at least. I felt that way even before today. I still personally feel closing below that is important. If we're thinking about it from that bullish perspective, to me, you have to get back on the right side of 65 before you can be thinking from a bullish point of view on the energy sector right now, because again, this might have been a fake out, but it might not, it just might have been a fake out early, right? This price has been important before. I expect it to be hard for it to break through it. From a bullish point of view, I mean, I don't really think your signal is until we've broke resistance way up here. So I don't really think there's a great bullish swing trade in the next day or two, at least over in the energy sector. But definitely keep an eye on 65, whether you agree with me or not. I think we would all agree that 65 has been pretty important when you're looking at the energy sector as a whole. Over in financials, man, it got ugly, and it was ugly. It was down over 3%, earlier in the trading day. Rallied up, closing down 1.39. So I mean, down 1%, 1.39% is not a great day, but when you consider it was, I don't know exactly the 3 point, but I mean, that's 2% or so. And most importantly, we came off of support. This is, I'm seeing a lot of, stocks in the financial sector that were breaking down earlier today. I haven't looked at all of them, how they closed. This support level is very important for the financial sector, in my opinion. If this falters, if this breaks, this was a major breakout point, as you can kind of see going way back here. So this has been a very important price point on the financial ETF as of late. A lot of those financial charts are looking overall very bearish, to me at least. That better hold, or it will look a lot like breakdown city to me in the financial market. I think this one you have to be careful on personally. Now all of a sudden we've got this overhead. I'm going to be looking at multiple levels of resistance that are going to concern me. First is going to be back up here where it was support, and then it was a support level, and then it's going to, if we take that out, then we have this trend line that I'm going to worry about as resistance. I think if you're bullish on the financial sector, if you're trading into it, if we continue to see upward movement, I think the right way to approach that is not to be looking at things that look like the ETF or the ETF specifically, and looking for actual individual stocks that are, in better trends and kind of going with the upward swing, if that's what we get of the financial sector. I think this is a very difficult chart for me to want to trade anything that looks like this. I'm just going to say yuck, go sideways for a while and then break support. That's my usual MO. So a lot of overhead though. So I do think if we are looking at things in the financial sector, individual stocks is going to be a lot more appealing to me, at least, than the ETF right now. And really same situation with the industrial sector. It's going to look a lot like it. We were able to, maybe close a little bit stronger than we did in the financials, but I have the same general concerns. This old trend line can develop as a resistance level. This old breakdown point can develop as a resistance level. A lot of overhead if we continue to see movement to the upside in industrials. Not, maybe tomorrow, but, more generally kind of talking about going into next week. I think the right approach, much like the financials, is, the ETF's too ugly for me. I'm going to find things that are doing, at least relatively better than the overall sector. And they're certainly out there. Tech, much like the NASDAQ, really had a solid performance here today. Didn't hold the same level of support. The charts kind of look a little bit different now than it does than the NASDAQ. Not tremendously, but more to the point, we were able to show nice upward movement, close above what was that old support level. I think that's kind of the first line of defense. More importantly, I think now we have a pretty good idea of if this is a bearish retracement, and it might be, right? Just like the NASDAQ, we've yet to make higher lows. Today's a good day. That's great. Good for you, NASDAQ. That hasn't changed overall. We're still making lower highs and lower lows, right? And so as long as that's the case, we have to respect that. But if we see that upward movement develop, now we can kind of say, okay, well, is this developing into some sort of a triangle type of a pattern where we are showing some upward movement? We obviously want to be careful. It's a good idea, in my opinion, to project. It's a bad idea to just assume your projections are right? So, yeah, this is going to make a higher low, run up, and then break resistance. I'm planning for that. Whether or not I think it's likely to happen, I just want to make sure that I don't get so, oh, of course that's going to happen. I'm human. We're all human. We can do some weird things in our head. But I do think we can kind of watch this 65 as our primary support level. Again, I think you have to be very careful with the sector as a whole because of the bearish nature of the charts in the NASDAQ, on the ETF here. Many of the stocks within the sector are still in these bearish type of patterns. So I do think you have to be careful with tech if you're looking at it from a buying perspective. Be picky, but always be picky, right? Always be picky. Over in staples, ran all the way back down, stuck our nose just a little bit through our previous swing low down here, briefly caught it. Again, it didn't close. I'm not going to stress it or anything like that. Saw some nice upward movement off of that to keep our trend intact as we move forward. So while it's pretty crazy, much like everything else, I don't really think our charts have really changed all that much within the staple sector as a whole right now. I'm going to continue to treat it the same way from a, if ideally what I will see happen is we work back above these short-term averages now, the 9, the 20. Those things can act as resistance and support levels. They're not, brick walls necessarily, but they can act as resistance or support. Obviously, they're above us right now, so that is, potential resistance. If you want to be, kind of on the more conservative side and you're still bullish within this sector, working back above them may not be, I wouldn't fault you for wanting it to kind of push back through those averages. On the other side of things, this is a support bounce. I mean, the candle is big. The risk to reward from a traditional, well, I'll buy it tomorrow, put my stop loss below support, it's gone, right? Much like the S&P, it just bounced so high off of support today that that's not going to work, that traditional style. But I can understand if folks are looking to work into stocks within the sector after today, if we continue to see upward movement here tomorrow. Over in utilities, back and forth, back and forth. Really, we know that we're kind of challenging that major, all-time high, that resistance level that's just right above us. This is, a defensive area, of course. Not a lot has really changed. We continue to hold the breakout. We continue to hover. Yeah, we're back and forth. It's volatile. It's not the boring utilities that I remember from just a few years ago by any means. I still think utilities should be boring, but I'm having to change that opinion. But really, we haven't really changed. Now, we did work down on the intraday all the way into this breakout zone, right? That we struggled with for so long. That is where we caught our footing. So a little bit, of maybe confirmation that traders do believe in that price point, do believe in utilities as a whole right now. So that's definitely something to be keeping an eye on. My friends over in healthcare, they were looking bad early today. Everything was looking bad. They were standing out, much like the financials. They were looking really rough early in the trading day. But much like the rest of the market, we're able to catch their footing on the intraday and rally up, closing pretty strong. I think we now have a little bit of an idea, of where our trend is within the utility sector, or I'm sorry, the healthcare sector right now. A little upward movement tomorrow. I could understand, again, I'm not super bullish. I'm not going to fault anybody if they say I'm not buying anything tomorrow. But with the way we developed here, I wouldn't argue with somebody if we see upward movement and folks look to move back into this sector as early as tomorrow. Now, obviously, we need some upward movement before that could even happen. That would be a fairly aggressive entry point, in my opinion. But some people use fairly aggressive entry points, and that's okay. It's up to us to decide how we want to move into things. I would keep an eye if I bought off of this, if I buy on some upward movement tomorrow, I'll be mindful of this old resistance, but I won't be really terribly worried about that. That wouldn't stop me. And if it would, then I'll just wait until we break above that. And that's where I would move in for the entry. So if you are concerned about this, resistance, and it was a level of resistance and it was important, waiting for it to break above that, if that's the way it's going to play out, would be a perfectly reasonable approach in my opinion. If you are already in or you're trading into it early tomorrow, potentially, be mindful of it. It has been important before. It wouldn't, deter me necessarily, but it would definitely be something I was monitoring from a price perspective. Over in the discretionary, much like some of our tech and stuff, we really actually held up fairly nicely. Now there was a lot more room, right? So you could argue why all you want, but I guess the important thing is that it did, right? Started to show some upward movement. It looked like, and again, this is just what it looked like, and maybe felt like is a better way to put it to me. It felt like we were trying to establish some momentum in the discretionary sector. We hadn't seen the signals that I was looking for at the time. It was the break of 112. I've now, that is now for me the break of 110 as the good buy signal. It really felt to me as we were going into last week that we were trying to really establish some momentum in this area. Obviously, that was the feeling. I'm not going to trade off of feelings, but I still do feel that way. I feel if the market isn't going to tank, this is an area that's caught my interest if I can take out some levels of resistance, along the way. Right now, again, much like everything else in the market, we have a ton of overhead just because of where we are on our charts. Some of these things look really rough. Some of them look really rough. We had bad earnings or bad responses to earnings, and a lot of the retail companies in particular, a lot of them had okay earnings but missed on forward guidance, and then they kind of gapped down, and they've got to get through all of that mess. So it'll be a challenge to break out within this sector. That's why if it does, I'm very interested. So I guess I expect it to be difficult. I don't necessarily expect it to happen, but I feel like if it does, that's a lot of momentum because that's a lot of stuff it has to get through, in my opinion. Over in real estate, a nice clean break of 34 here today. I have to love it. It was, again, we came all the way back down to the trend line on the intraday before taking that final run at that resistance level. And I don't know what else you say about this other than that is a nice clean break. If you're looking to the next level, I mean, 35 is basically it. Much like utilities, where we just have that last, all-time swing on the actual ETF, we are approaching that here on the real estate sector as well. This continues to be a very strong sector. Have to love that breakout. Very, very pretty on a hilariously, I guess hilarious, I don't know, maybe a sad note. I don't know what I want to call it. Prologis. This is something I've been watching for a breakout forever. We've had it on the scouting reports for a couple of times. I'm usually to blame for that because it has all of that history at that resistance level. If you go into a weekly chart, you can see that's a ton of overhead resistance at $68. It finally broke out in a nice strong sector on Monday, and then of course Tuesday happened, and then today's opening on the sell. So who knows? Prologis. I was hoping you were going to be able to have a nice clean break, but sadly you didn't. But responded well today with the sector. So I thought I'd share one of my sad stories. I've been waiting for that break forever, and then get stopped out the day after. So, but such is life. Gotta love the breakout. I mean, at the end of the day, there's not a whole lot I can say. Keep an eye as we approach 35 as a resistance level. Don't be surprised if we pull back, but now we can look at 34 to kind of be our first level of support moving forward as long as it holds. And then lastly, over in communication services, they had a good day. They really did. They've performed well today. Their charts, are still kind of like the tech charts where it hasn't done enough. We haven't, broke resistance. We're still making lower highs and lower lows. So that's where I'm going to lean until that stops happening. But I mean, at the end of the day, these were areas, tech, communication services, you got to call it like it is. And these were areas that were propping up the market early. These were areas that were showing strength before we started to see those intraday breakouts. And I don't know if, I don't want to read too much into it. I don't know if it means anything, but I do have to tip my hat because these have been some of the more, beat up areas, as of late. Oftentimes they've been the leader in the selling, and so seeing them kind of prop the market up early and get the ball rolling to the upside today, you do have to appreciate. Again, any buy side, signals, for me at least, it's the same as it was yesterday. It's above 46. That's, I think, the primary level of resistance to be looking at. That is our previous swing here. If you're looking to go bearish, there are still probably going to be some interesting opportunities within that sector I wouldn't be bullish on this sector overall. These charts are still too ugly for me, but I do appreciate the effort that it made today, and that's always the first step to, sometimes it's the only step, and it gets tired and calls it a day, but we do have to kind of show strength to develop strength, right? So we still have a lot of overhead to contend with, still have done nothing since our inception but make lower highs and lower lows. But again, if we start to see some upward movement, then we can at least start to make that argument that it's trying to make a higher low if we can take out some resistance. And again, this probably isn't going to happen tomorrow if it ever happens at all. Well, eventually it probably will, but it doesn't have to be in this time frame. So, it doesn't have to be this year. That will be something that we'll monitor together, but a very strong day today. I don't love the charts, but I do appreciate the strength of that sector here today. As we kind of shift over into our commodities, gold just kind of hanging out and holding that breakout of approximately 1240. I guess that's the number. We got to give it a number. I'm giving it 1240 as the number that I'm working with. Now for a third day in a row, it hasn't really done anything. Started to make a little upward movement today, but nothing dramatic. Most importantly, closing above 1240 now for the third day. If this is a breakout you're interested in and you're already in it, you can't be unhappy with the way it's going. Yeah, you want it to move faster because of course you do. If you're in a bullish trade, you want it to move as fast as possible. But from a technical point of view, all you can really ask is it continues to hold the breakout point, right? If you were waiting for another day of confirmation, well, now we're 3 days in. That may or may not be enough. If you're interested, I understand that, but we do have a third day close above that resistance level if that is what you were waiting for. Again, I don't really think there's much to say here. This is a pretty textbook breakout in my opinion. The question is, do you want to trade it? If you want to trade it, your stop has to be below 1240 per your own trading rules. As long as it's below 1240, your rules will apply. I think it has to be below 1240 personally. I'll be watching the 200-day moving average as the next real technical challenge, in my opinion, with it. So as long as we hold 1240, I will completely understand people that are buying into the breakout, however they're going about that, whether it's buying, gold, buying the futures, buying GLD, doing covered calls on GLD, whatever it might be. As long as we hold 1240, I have no objection to it. I do think silver, as I've said before, is a little bit weaker, certainly not as clean of a chart right now as gold, no doubt about it. Another back and forth day over there. I really, for me, again, I'm not going to change my opinion likely, anytime soon. It's still above 15. If you differ though, that's fine. People obviously, differ, and people clearly have been buying silver between 14 and 15. Just because I haven't done that doesn't mean obviously a lot of people have been doing that exact thing. If you're in it, I don't really think much has changed from a technical point of view for you right now. You're still, as long as you hold that approximately 14 number, you're in a sideways range as far as I'm concerned, at least. But again, for me, the signal, much like gold, it's not that you can't trade within this. It's not that there's not interesting intraday opportunities within this sideways range, because of course there are, but I don't think it's a great swing trading type of a range. Over in the dollar, back and forth, held our trend line. Matt said it in the halftime show, and I hadn't really thought about it until he said it. And he said, I'm kind of, not bullish on the dollar. Not that he was bearish. I'm not exactly the quote he used, so don't quote me on it, but something along the lines of, it's a more neutral look that he has on it right now. And I thought immediately, yeah, I agree. I still respect the bullish side. If you had me make a trade right now, if I had to, I would go bullish. Of course, I'll never have to do anything like that, hopefully, at least. As long as we're holding our trend, I understand that. But I think you're probably looking at individual pairs versus the dollar index as we kind of try to figure out. It looks like we're going into a consolidation period. We just, haven't really established any momentum. Now, on the other side, that's what it looks like. The simple reality is that's my opinion, and I'm entitled to it. The reality is we are still in that upward trend. And as long as this trend holds, and in my opinion, as long as 96 holds, if you are on the bullish side of things, I don't disagree with you. I'm just personally think a neutral approach is a better approach with the way the chart is developed as of right now. The problem I see with just this specific chart is for it to kind of break to give me an opening, an entry point that I'd be comfortable with. I can't see how it could happen before it broke the top. I guess it could, but I'm just having a hard time seeing it. Now we're starting to develop some intraday resistance over the last few days. If we break that, yeah, that's an entry point in my opinion, but then we have resistance at 97.50. There's just not a lot of room there in my estimation right now. So for me, I'm kind of taking the, I'm not bearish. If I had to say I'm bullish or bearish, I would say bullish, but I really think I'm on the neutral sideline right now with the dollar while it kind of does this little dance here that it's been doing. Over natural gas, continue to trade within a range. Now we're starting to develop, let's come into an hourly chart. We're starting to develop, a little bit of an intraday range that we can work with. You can kind of see we've come back to this support level. This has been very difficult for a lot of swing traders to trade just with the way it's been behaving as of late. I still feel like you're really looking at the signal. These, same lines that I have drawn on here between 4 and 480 is kind of the major price points that I'm looking at. And I think that break is the best technical signal from a swing trading point of view. But if you're trying to work into it, we are starting to develop a little bit of support right about where we're at. We're, of course, still in that downward trend, but just kind of thinking out loud here, if we take this out, we've bounced off of support, I could call that a buy signal. And I'd understand if somebody did. So if you have been looking for a way in, you don't have to use this hourly chart. You don't have to use my analysis there, but you can look to an intraday chart and apply your own analysis if you're trying to get into these things that are difficult to trade within a swing chart. Now, with all that said, I still think that the way to play it is wait and see if it breaks 480. So, unless you're specifically doing some intraday trading, and then in which case that's fine. But if you're looking at it from a swing point of view, I think as long as we hold this and hopefully we can get a run up to 480, because then we can use this as a support level that started to develop on that intraday as a swing level of support. For me, that's what I'm continuing to look for. But that goes for everything, not just natural gas. It just, with the way that the patterns developed on natural gas, I thought it was a natural thing to talk about there. But you can always use the intraday to get into things or to build your entries if you're comfortable doing that. And then lastly, our old friends in crude, support to resistance trade in 2 days, so another one of those. We worked back into that 20, going into yesterday, hit that 20, worked down off of that 20 all the way back down to 50 here today, where we bounced off of that. Unfortunately, I don't know that the swing development's there anymore, and we were talking, a couple days ago, if we were to get that signal at 54, I would have been perfectly comfortable with taking a swing trade down to 50. But now, if we work back up into that resistance level, it's just not going to look quite the same as a retracement. It looks to me like it's starting to develop into a little bit of a range to see if it wants to break 50. Because again, much like the market, if this thing breaks that support level, who's buying it at that point, right? If you guys, I've talked to some of you guys, you guys have talked to the different coaches. I've talked to a lot of traders, and everybody says it's a sell below 50, and I don't, so whether they're right or not, I guess time will tell, but everybody feels that way that I've talked to at least. And so it looks to me, like the opportunity for the bearish retracement is just, at least on a swing perspective, is kind of not going to develop just with the way it's moved. We really needed it to kind of slow down at 54, then see some downward movement, I think, because you have to respect 50, I think. I think any trade that you make from a bearish point of view, your target has to be getting you out before 50, because that is an important number. And while a lot of us do think it's going to break, none of us are trading it until it happens, right? So we obviously respect that level of support. And I think any bearish trades that you're taking on crude, you have to consider that as, I've got to get out of here. I have to assume that that level is going to be a strong level of support. I'll get in if it breaks it, potentially, sure, but I'm not going to assume it's going to break it. But overall, again, any technical reason to sell crude on the other side, I get it. But with the way it's developed as a swing trader, at least intraday, it'll feel a little differently. If we work back to 54, get some signals on the intraday, sure, I think there might be something we can develop there. But from a swing point of view, it doesn't look like it's going to develop the way we probably, at least I wanted it to develop. So not a whole lot has changed technically. That was a long-winded way to say it, but I do feel like the way it went, it needed to do very little today. Because even yesterday, if we were to take out 52 today, I thought there was an opportunity. But again, it's moving quick. We're in a pretty tight range and a pretty volatile market, no doubt about it. But again, still very, very bearish as a whole. I think most folks would tend to agree with that. So, I mean, it was definitely a day. There is no doubt about it. It's, right now, I think the best way to look at the market is it's jumpy, it's jittery, however you want to describe it. You have to assume that, volatility is here again. I know that volatility, had died down some, and I expect that it will again. But again, I will expect it to be volatile until it stops being volatile, or at least until it starts slowing down. So I do think the right approach to take within this market is to look at it from that perspective, and whatever that might mean to you, whether it's, smaller position size, sitting it out, loving it, day trading, whatever it might be. That's how I would approach, the market, going forward. I imagine it's not going to be super volatile for too long. I mean, it's been a crazy week, right? It has been a crazy week. Big gap up after G20, huge sell-off, Wednesday off, huge sell-off followed by a huge support bounce on Thursday. I mean, it's been a week, so it definitely had some interesting movement. I think really the key thing to bring out of today, though, is at least for today, support wins in most cases. We saw support hold all over the place. Now we had to get there. We had to break shorter term levels of support to get to those long term levels of support, like on things like the financials and industrials and even our indexes. But they held; those support levels held. So I'm going to assume that we're going to continue to trade kind of within that range. It's just, I'll also assume that until, it kind of stops being so volatile, it's going to continue to be volatile. And whether, or not I'm right, I think that is a good assumption to have. So with that, ladies and gentlemen, that's going to do our market recap for a very exciting day in the market. We'll see what tomorrow has in store for us. Ed asks, how long do you determine how to keep some protection on? For me, Ed, as I go into it, ideally the way you're going to approach that, in my opinion, is to have that plan ahead of time. Now, are you talking about kind of, generally speaking, like on the S&P, or more on an individual stock, Ed? Because I always want to have that game plan in place there. If I'm talking about broadly, I would have been looking at those bottoms on the S&P, those major support levels. If I'm on an individual stock, that's about where I'd go, because I want to make sure that that support is what's holding for me. So as you're seeing things fall from where they are to support, I think that's where, for me at least, I want to have that protection. Once I get back down onto that support, that major trend line, whatever it might be, that longer term level of support, Ed, that's where I would be looking to know if I see upward movement off of that support level. That's where I would personally look at starting to take some of that protection off. Not necessarily all in one fell swoop. I think it's perfectly reasonable to take on the daily. For me, if I'm going to be in something that that I feel like I need to put protection on, Ed, it's not going to be an intraday trade. It's not even going to be maybe a textbook swing trade. It would be more of a position type of trade. So, I mean, the easiest, example, for me right now would be the S&P chart, just because it's so, clear and easy. Whereas I know you were picking up protection the other day. I missed your question until I'd gotten off the off the stream. But I know you picked up some protection, on Tuesday. Basically, once I approach support, I'm not saying, and again, if I'm perfect, if you're perfect, we took that protection off right at the low today, right? I wouldn't have done that. Realistically speaking, though, again, in hindsight, I would have, but that's giving myself probably far more credit than I deserve. Nobody's perfect except in hindsight. But as I work into the support, now I expect the support to hold for me. Now this is kind of where I'm going to start to look to unwind those type of things. So exactly that, Ed. So as I approach those support levels, that's where I'm going to look to unwind them, because I expect those support levels to hold for me. And then if they were to break, then I'll, of course, pick up some more protection. Does that make sense, Ed? So I'll just apply the good old-fashioned major levels of support, major trend line philosophy for those type of situations. Personally, I mean, you can do it on the intraday, but I don't really see, again, in this specific 2-day window, that was perfect. Yeah, if we see some upward movement, Ed, I would understand if someone was kind of winding out of that. But again, at the same time, if you want to basically say this support, it could break, right? Sooner or later, we're coming out of this range, Ed, right? Eventually, we're either going to break to the upside or break to the downside. If someone were to say that until we figure that out, I want to be here, I would understand that. But yeah, if I see something move off of support, for me at least, that's kind of where I'll start to look at it from that perspective. So yeah, but again, I don't think there's anything wrong with unwinding too. As opposed to, a lot of times we tend to, as traders, we think in terms of all or nothing, right? We do it a lot on entries, on hedges, on management, but really, unless we just have one call or one share of the stock, I mean, scaling in and out is perfectly reasonable, right? And that's kind of my preferred method, because if I was worried enough to buy some protection, to hedge myself, then that didn't change overnight. The only thing that's changed from today versus when you were setting that up, Ed, which a good play on your part for sure, is that we're closer to support. But now we're a ways away from support, right? So, but that's really the only thing that's changed, because we're still in that same range. So again, theoretically, if we're perfect and want to play that I'm perfect game, we set up that hedge, up here, buy that protection up here, we unwind it out of it down here. If it breaks here, whatever that means to you, to me specifically, that's where I'll add that back on. So that's how I look at it as a general rule, Ed. I hope that gives you some ideas. So yeah, exactly. The close didn't do you a ton of favors with the way that it played out here today. That's for sure. I mean, I guess you can look at it the other way. It makes it difficult on the hedge, but on the long position, it did okay from it. So yeah, I mean, that volatility definitely is probably not going away yet. So I mean, if you want to sleep at night, I wouldn't have any problem with anybody keeping protection on their trades while we're seeing this type of daily movement. And so, I wouldn't, ever feel, like that was the wrong decision. It might end up being the decision in hindsight you didn't have to make, but I'm not going to fault anybody for having, protection on their trades right now with the way that the market behaved particularly this week. It's jumpy, it's volatile. We all know, if and when it breaks this support level, people are going to be panicked, right? Whatever that exactly turns into, I don't know, but everybody's going to call that a sell signal. And a good chance it can happen fast, right? If that breaks, it can happen quickly that it sells off. So, if you want to stick around it, I don't think that's a bad thing either by any stretch of the imagination. So, with that, ladies and gentlemen, I hope that gives you some ideas, and good luck, Ed, with whatever it is you do decide to do. And hopefully everybody has a good day trading tomorrow. We'll meet up same time and channel for the market recap here tomorrow. But as always, guys, it is certainly my pleasure, and I certainly appreciate everybody's time. Be sure to hit the subscribe button and the notification bell if you haven't already, so you can always be alerted to our videos and streams over here. And be sure to follow us over at Tackle Trading on Twitter as well to keep up with some of the interesting things we think we're finding during the market hours. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up, just to let us know that it is helpful and we're on the right track over here. With that, ladies and gentlemen, get out of here. Happy trading, and I will see you all in the next one.